interest rates spiking here, are we finally ready to appreciate the banks? So far, we heard from the big money centers, some of the smaller regionals. Even when the results are strong, though, it doesn't seem like anybody cares. Now, though, upon further review, investors are waking up to the idea that it could be a very good time to be in the banking business. Take First Horizon National. It's FHN, the Tennessee-based regional bank. Tennessee just on fire here. More than 300 locations across the Southeast. Here's the company that reported last Friday. Initially, the market's response was just, meh. First Horizon delivered a 3-cent earnings beat off a 31-cent basis. Key metric here is net interest margin, what they make off the difference between what they pay you for your deposits and what they can make from investing or lending, and also, of course, buying treasuries risk-free. The number here was huge, up 52 basis points year over year to 3.43%. That's the largest delta I saw. We use that delta word, it's fancy. Management also told us the recent acquisition of Capital Bank going quite well, allowing the company to hit its long-term profitability goals a year early. Yet the stock actually ended up going down. It was about off 1% on the news. Even here a week later, you're getting that quarter for free. I think it's actually crazy. But don't take it from me. Let's hear from Brian Jordan. He's the chairman and CEO of First Horizon National. Learn more about the quarter, his company's prospects. Mr. Jordan, welcome back to Mad Money.
Thank you, Jim. It's good to be back.
All right, first, I just got to ask you, Brian, all day today, all I heard was, oh, my heaven, the sky is falling. We are almost at 3% on the 10-year. You've been around for a while. Is the sky falling if we get to 3%?
No, the sky's not falling. That's about as predictable as the sun coming up tomorrow. Interest rates had to go up, and the Fed has been very clear that not only have they raised rates, they intend to raise rates in all likelihood 2 or 3 more times this year. And steepness to the yield curve is a good thing. The 10 years going to migrate up as the Fed normalizes on the short end and reduces its long end pressure with the quantitative easing that was implemented in a couple phases over the early 2010 to 12 timeframe.
And is it possible that people either forgot or we have so many young portfolio managers that they don't realize that being a banker in this environment makes it so that you should pay a lot more for that banker's stock?
I don't know. It may be that it's a sense that it's going to slow down the economy, and I don't see that happening. I see pretty good fundamentals in the economy. But to your larger point, financial institutions clearly do better when interest rates are higher and when you get that steepness in the yield curve.
Now, you are in, because of this most recent acquisition, a footprint in a lot of states. Are you seeing anyone in the actual business world, business people, who are saying, you know what, Brian, I don't want any First Horizon money. I'm afraid to borrow here because the 10 years at 3.
Right. No, we're not seeing that. We're seeing pretty good customer activity. Folks are borrowing money. There's a continued follow-on impact, I'd say positive, from a lessening of regulation in the economy, and we're now starting to see the impacts of the Tax Act that was implemented in the December timeframe. So I'd say customers are still fairly optimistic, and we see good pipelines and good customer activity heading into the second, third, and fourth quarters of this year.
Well, I'm glad you asked about deregulation because I speak to a number of small business people, some of the businesses that I have. Small business people I know want to open the next store. They want to open the next restaurant. They want to buy the additional truck because they're much less worried about regulation. It's just kind of a mindset. Your customers are seeing it too?
Yeah, absolutely. Our customers are looking for opportunities to grow and to invest. And if I had to make a categorical statement, I would say financial results in 2017 were better than 2016. That leads to a stronger 2018 as people have more money to invest in growth. And I'm very optimistic about the outlook over the next 3 to 6 months.
All right, and the last question, when I was on a lot of the big bank conference calls, the criticism was, how could you only be making this little amount off of net interest margin given how much the Fed's raised rates? You are giving us the numbers that I thought other banks would give us. Why are you participating so well in net interest margin?
Well, there's 2 factors. One is, and you mentioned in your introduction of me earlier, that the Capital Bank transaction has added a little bit. They had a little bit higher yielding balance sheet, and then you get the effects of purchase accounting. But if you set that aside, the bigger driver, and the likely to be bigger driver in the future is that rising rates or asset sensitivity benefits financial institutions, and it certainly has had an impact on us. Our balance sheet is tied to the short end of the interest rate curve, meaning that we have more floating rate assets tied to prime and to LIBOR, which adjust when the Fed moves Fed funds. So we're seeing that flow through our balance sheet. and we're very encouraged that we can continue to build on that momentum as the Fed continues to normalize the Fed funds in this environment.
Well, I appreciate the sanity with which you just told that story, because it's what matters to our investors. That's Brian Jordan, Chairman, President, and CEO of First Horizon National. Thank you so much for coming on the show, sir.
Thank you, Jim.
All right, this is one cheap stock. Now, we have been on this stock since 11. Do you think we know what we're talking about? You know what we do? We listen to him. He knows what he's talking about. Stick with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.